Hello, everybody, and welcome to the Dash Trader Newsroom. Another new market holiday and yet another new market high. We just had a day off thanks to the celebration of Freedom Day, Juneteenth. How are you doing, Jill?
Good, doing well. Good to see you.
Hanging in there. My name is Michael DeJoy, Director of Educational Services here at Dash Trader. You know Jill, Global Markets Reporter from NASDAQ. We're going to jump right in. It seems like Nvidia has just taken the top spot as the largest market cap in the world, surpassing Microsoft. I mean, is this valuation justifiable? I mean, the valuation of Nvidia is larger than the entire market value of most of the major markets in Europe. Not together, but individually. If you take Germany, France's, or England's stock market, Nvidia trumps those in terms of market cap. Is that market cap is it justifiable?
Right. Well, I guess we'll figure that out, whether it's Nvidia or some of these other companies that have excessively high valuations relative to peer and their overall indices. That's why I think, when we go into earnings and we think about guidance and so forth, it's really going to matter for the back half of 2024 and 2025. So we know they have the products out there to, supply the demand for all of these AI advancements that are being made. The fact of the matter is, are they able to keep up with the demand? What does competition look like? Supply chain disruptions can always be an issue, but it's almost like they are the axe of the, the business. You know what I mean? It's almost like everything else is a derivative play off of that. I mean, you saw what happened to SMCI because of the relationship to Nvidia. So it's really, I feel like we're still in that phase trying to figure out what stocks and what companies have the exposure to AI. Nvidia is kind of the axe there, but again, whether it's Nvidia or any of these other companies, whether they're small, mid, or large cap, in order to justify their multiples, they're going to have those proven revenue streams and then carve out their place within the total addressable market.
Yeah, I mean, you and I have seen this though a number of times. I mean, like, if you go back, out of maybe a year and a half or so, everybody was talking about Tesla taking, this kind of market cap title, and it's been going back and forth between Apple and Microsoft. So we have seen some fluctuation. One name becomes the top name, and the question is whether or not Nvidia is going to stay up here at the top. But it does bring into question the S&P 500. Briefly broke the 550 number and 5,500. The question is are we in sort of a AI tech bubble, or is this a similar to the internet tech bubble of the early 2000s, or is this just one stock that has kind of become, like you said, the axe, which what used to mean the main leading market maker that controlled the stock was the axe. But now the axe pretty much signifies the one stock that controls the sector. So your thoughts, is this just kind of a bubble, or is this something that has legs? What are your thoughts on that?
It's necessarily a bubble because our understanding of what the internet and what technology affords us, in my mind, is very different than the late 90s and early 2000s. So we've learned something from there. Like, we also have to recognize too, back then, if you think about the composition of the S&P, industrials and finance had a bigger chunk. Now flash forward to 2024, and tech is the most heavily weighted in terms of the 11 gig sector. So things are very different since then. Second to that, once financial media is kind of crazed about, who's in the horse race to, have the highest $3 trillion market cap, and that's all that they're focused on, that kind of does suggest that there's a lot of hubris in the market, right? We are also in the absence of earnings. What's happening with the Fed and so forth is kind of baked in the numbers, and nothing new is happening there. So, I think, and we've spoken about this, that investors and traders were going into the summer with a more complacent, it's kind of going to be the doldrums of the summer. And when everyone has that kind of attitude, it always concerns me that there's things bubbling underneath the surface. We did a segment this week isolating what we're seeing in the volatility markets and options, and the VIX on Monday was at 12.5. VSTOXX, which is European VIX, was at 20. So 12.5 to 20, something's got to give somewhere.
Yeah.
So that's, you have to pay attention to things like that. I don't think it's necessarily election volatility priced in yet, although they're apparently going to debate next week. Again, I still think it's still too early. So I would just, it's a good time now to load up on some protection. But you also have to understand, if your bench is the S&P and the NASDAQ 100, and you are below it by 6 to 7%, 8%, because you don't own Nvidia, Apple, Microsoft, you've got to put the money to play catch up. So
Yeah.
that variable is always going to exist. So, things might still be rosy for 2024, but I do think in 2025, it's going to be time to pay the piper. And I'm not just saying that because everyone said it in 2023, but there's just a whole, we're going to have either the same or a different regime here in the US. And they still haven't spoken about policy or what areas of the economy could benefit, not benefit. So I feel like we could get more clarity there in 2025. And it's just going to be one of those things where, earnings will be the tell there.
Absolutely. I think so. And we are in that little window up until the middle of July that we don't have any earnings going on. So we are in a little bit of a vacuum in terms of, this is Nvidia market cap becomes, basically the biggest market cap in the world becomes, headline news, which it would be anyway. But interestingly enough, we have a very different story for the Bank of England versus the ECB. ECB cut rates. They were the first to cut rates, but it does seem like the European economy is way softer than the United States and the United Kingdom. So the Bank of England held rates steady, and they seem to even have inflation in check, although I had a long conversation with a friend of mine in the UK, and he doesn't seem to agree with these inflation numbers. So I'd love to hear your thoughts on what's going on in England versus the European Union and the United States, and why does it seem like the United States is doing so much better than our European counterparts?
So there's a couple things here, and I agree with what your friend had said about his perception of inflation, and that's something that we've been discussing, is the bifurcation in the U.S. economy, where consumers, particularly on the lower end of the spectrum in terms of affordability and spending power, are perceiving it very different. There's been polls that say they think we're in a recession. Unemployment's the worst it's been in 50 years, which simply isn't the case. But because their benchmark are prices that we saw in 2019, and in effect, effectively everything's up 20 to 25%, and dollars don't stretch the way they used to, their perception is inflation, regardless if you're seeing disinflation in the numbers, it is still highly impactful, and dollars aren't going the way that they used to. We know the cost of services and events and everything. You know what it's like to take your kids to a baseball game or to a concert.
It's incredibly expensive, yeah.
And then you also have to factor in food bills being 20% higher. If you're a commuter on New Jersey Transit, your tickets are going up 15% next month. So it's a bifurcated economy, I would say, here, the UK and EU. I would say even bigger than France, when I think about what's happening in the EU, and just how there's a shift to more of a center-right, right-wing surge, the factors that they are grappling with are really similar to what we are grappling with here. So immigration is one, the green agenda, Ukraine in defense, industrial energy, the type of things that we are allocating resources for, but not making it either more safe or more affordable to the everyday person who perhaps isn't as focused on the energy transition to renewable energy when they're just trying to get by. That is why you're seeing perhaps more of a conservative, isolated mindset taking effect.
Yeah. So what, but can you give a little bit of color as to what is actually going on in France and how that could negatively affect the European Union and potentially affect the markets? Because it seemed like they called some kind of a snap election. I'm not so familiar with European, politics and how it works, but it seems like this could put in jeopardy the entire EU as an economic union. At least that's from some of the things that I've read.
Right. Well, part of it is you have to remember that France is the second largest economy in the EU, right? So if
After
there's
Germany. Yeah.
right, so if there is uncertainty there in terms of policy, if they're concerned about government borrowing and spending, the contagion effects are a little bit different because they're individual countries, whereas we're individual states. So our federal spend and what happens on a federal level is very different from there. So, it would be as if all the states in the US were separate countries. And if something happens in the California economy, as an example, I believe that's like the eighth largest economy in the world, that will send systemic shockwaves. No, I don't think it's as dramatic as that, but I do think, that does rattle markets a bit because it becomes it's a currency issue, it's a trade issue. When you
Yeah, it's
start
another
thinking,
uncertainty, right? It's
well,
another
I mean, people
uncertainty,
are
and
calling it
markets hate
Frexit.
uncertainty.
What if you have a Frexit like they had with Brexit, right?
Yeah.
That just disrupts the status quo.
Yeah, which is exact. I mean, basically, yeah. I mean, we're still dealing with the effects of Brexit, and actually, the UK is having an election as well. So, I mean, I believe there's a UK general election as well.
Mhm.
So, so last but not least, so we haven't seen the markets react at all to this. The markets don't seem to be concerned that Russia and China seem to be officially teaming up. And not only that, it was about a week and a half ago that Russia sailed its navy into Cuba, which is very reminiscent of the Cuban Missile Crisis. I mean, are we missing something here? Is there a reason why this is not something we should be concerned about, or is this just the markets are focusing on the positive developments of AI rather than the fact that we have some geopolitical concerns developing?
Um, you know what? I feel as if the market has been climbing the wall of worry since the Ukraine invasion. It seems as if there are conflicts all over that, unfortunately we have to insert ourselves into. You know what, I feel as if the market has such short-term memory and markets just continue to move higher that it doesn't, it's not even a blip on the radar anymore. I mean, Mike, like I remember, you know, back when I was on the trading desk, I mean, again, I was on there for a while, but even as something as recent as, hurricanes that impacted New Orleans, right?
Yep.
Katrina, or if there was
Yep.
an isolate, like, or like when they had the reactor um, situation in Japan, I can't think of the name right now, but
Yeah.
those events used to be, it wasn't just overnight and it wasn't just, it's the thing for 6 hours in the news cycle. It was the news cycle. And I
Yes.
feel like because there's so much happening in front of us and there's the, social media here now, we didn't have those things on a regular basis, 2010 prior. So it just feels as if the news flow.
It's a very interesting point that you think it's just really the news cycle, right? That markets are extremely short term memory. They just
Mhm.
deal with whatever's popping up, and then it completely brushes it off onto the next
Yeah.
news item.
Well, I mean, think about 9/11. And
Yeah,
again, we're from New York. We live there. We went through the whole thing. So,
years.
it's
Yes.
almost like, um, the people in Israel had to contend with October 7th. It's their day-to-day life and something that they're focusing on. They live with this all the time. But for us, I mean, and it's still the case where I think a big part of it was we didn't have all these different sources and conspiracy theories and everyone being, a foreign relations expert on Twitter coming at us. It was a little bit more organized in a way, if that makes any sense.
Yeah.
And we didn't get over it. And this wasn't just New Yorkers or people in New Jersey or Pennsylvania. It was, the markets had to work through all of this.
Yeah.
Whereas now, conflicts it's part of the news cycle.
Yeah, I got you. So I wanted to just ask you because we were just at the retail executive summit at Nasdaq. Anything else on the horizon that you see that's popping out in your mind that you've spoken about in the last week or so that you think is important that might have potentially affect the market in the next couple of weeks?
Um, What retail? I'm sorry, I don't know what's.
So there was at the NASDAQ, there was a online executive retail summit.
Oh, okay,
And
okay.
so we were just meeting. They were talking about the increase in options trading, derivative trading. How investors have really increased appetite for fixed income, especially in light of higher rates. Is there
Got it. Got it.
anything that you see as a as an outlooking trend? Going into summer before earnings season, anything that you've come across in the last week or two?
So sorry about that. We have so many activations at NASDAQ,
Oh yeah, it's
so
busy.
many different business units. But I will say, based on the institutional asset managers that we have on the show, whether it's digital assets or TradFi, that the biggest thing we're hearing about is a bifurcation in the economy, and this is more macro, not necessarily as focused on trading like your webinar may have been, but the bifurcation of the economy, resigned to the fact that maybe one, maybe two rate cuts for 2024. Because now, Mike, it's the flip side, and you and I have discussed this before. If we were to get 6 to 7 rate cuts in 2024, like the market expected at the end of 2023, there's a signal that there's something, to get 6, 7 in a year, there's an issue with the economy, right? And do you have to weigh that out? Do you want rate cuts, or would you rather have stability and jobs in the economy? So that's really what they are grappling with. Another thing, of course, is that spread between mega cap tech versus the rest of the market, and then complacency and the feeling that there is some stuff bubbling up underneath the surface. So as much as perhaps we expected a slow and a lull over the summer, that concentration risk and a handful of names, I think keeps portfolio managers on their toes.
Yeah, I think we just had the market close because I hear the NASDAQ going off somewhere. But excellent, excellent points, Jill. And I want to thank you so much, as always, for bringing important items to light. And have a wonderful weekend.
All right, sounds good. Take
See,
care. Good to
see
see
you
you.
next time. Bye-bye.
See you.
All right, so let's bring up a couple of charts. I mean, the first chart that obviously I have to talk about is just Nvidia, NVDA. I mean, we had a massive blow off top today on Nvidia. We gapped up, and then we put in a massive outside bar candle. We did temporarily make a new high at $140 per share. And this is an outside bar pattern. It's very, very big volume. It might indicate that this run up that was kind of initiated by the mention of a stock split, and then the execution of that stock split. Usually we would say that around 150 to 140, that would be the area that the post mention stock split run up. Because when you mention that a stock is about to split, a lot of people who want to buy it pre-split, and then they want to sell out a fraction of those shares that they bought pre-split. So let's say you bought 100 shares when it was still trading at $1,100 per share. Then you end up with a 10-to-1 stock split. Now you end up with 1,000 shares. From 100 shares, now you have 1,000 shares. Now the stock runs. So here's the big run up. Stock runs from basically $120 to $140. This hits 140. Now you're selling 500 of your 1,000 shares. Now you only bought 100 initially. You got a 10-to-1 stock split, so you ended up with 1,000. Now you've sold a portion of your position. Maybe you only sold 200. Maybe you only sold 300. But that is probably what this blow off top that we're seeing in Nvidia is. But it's funny. I was just talking about this with a friend of mine who had invested in it. Definitely something to take note of. Now let's take a look at Apple, AAPL. Apple having a bit of a pullback day as well. It did make quite a run up when it broke to new highs, so that definitely taking a little bit of a pause here. But Apple has really recovered very well from some of the bad news that it had recently. Let's take a look at Meta. Meta really has been a dead duck lately. It's been pulling back, really not too exciting. Let's take a look at Microsoft, MSFT. Microsoft made a big run up as well and is pulling back a little bit. really performed better than the other two that we just looked at, performed better than Nvidia and better than Apple. Let's take a look at Amazon, AMZN. Amazon looks like it's really consolidating for a potential breakout, putting in higher lows and lower highs, but consolidating nicely. And let's see, we got Apple, Microsoft. Let's take a look at another. Well, actually, let's take a look at USO oil. Oil prices have been really, really ramping up, which is not uncommon going into summer. So oil prices tend to increase as we move into summer. So here, you can see that making a nice move up in oil. Now that will affect inflation, because as the price of oil, that will certainly drive up the prices of everything else. GLD. Gold really holding steady at these heights. There was a report that came out that gold miners like GOLD will be up 20% due to the price of gold, right? So certainly gold miners are something to keep an eye on, like Newmont. Newmont mining looks very similar to the price of gold. So there's a couple of different stocks to take a look at. Let's take a look at the QQQ, which is the NASDAQ. Similar kind of blow off top, but I mean, you could see, that was the deep pullback that we had back in April, and then another blast off. Let's take a look at the S&P when it made that little peekaboo new high. But looks like we're just, basically dealing with some profit taking at this point. So far, nothing too significant in terms of a sell-off, just a one-day reversal. This is an outside bar pattern, and it is a wide range bar pattern, but it certainly is at all-time high. So profit taking is to be expected. All right, let's go back to our presentation and wrap things up. All right, we just finished up our market analysis section. And stay up to date with all things DAS by signing up for our monthly newsletter. Fill out the form at the bottom of our webpage at www.dastrader.com. Subscribe to our YouTube channel at DAS Trader TV and the DAS Newsroom reminders. Follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. Thank you very much for joining us. Have a wonderful, wonderful weekend, and see you next time.